Imagine you are hiking in the mountains, or sailing in the middle of the ocean, or driving through a dead zone in the middle of nowhere. No signal, no Wi Fi, nothing. You pull out your regular smartphone, the same one you use every day, Ambas, and it connects. Full call, full data, no special equipment, no satellite phone, just your phone. That is exactly what AST SpaceMobile is building. And right now, the stock trades around $118 per share, with a market cap of $45 billion, up from $22 just 12 months ago. Today, we break down what this company actually is and both sides of the story. AST SpaceMobile is building the first and only space-based cellular broadband network designed to operate directly with standard, unmodified mobile devices for both commercial and government applications. Here is how it works. Traditional mobile networks rely on ground-based towers. When you leave the coverage area of those towers, in a rural area, at sea, or in a remote region, you lose signal. AST SpaceMobile puts the tower in space. Their satellites act like 4G and 5G cell towers in orbit, using the same spectrum licensed from partner carriers. The technology is 3GPP compliant, meaning smartphones connect using exactly the same protocols as ground-based towers. No new SIM card. The subscriber's existing device connects through their existing mobile operator to a satellite overhead, as a seamless extension of the terrestrial network they already use. The satellites doing this work are called Bluebirds. Each Bluebird is equipped with AST's proprietary chip, the AST 5000, which allows each satellite to deliver up to 120 megabits per second per coverage cell across more than 2,000 cells, powering millions of calls, texts, and streams every day. Critically, AST SpaceMobile does not sell directly to consumers. It sells wholesale network capacity to carriers who then offer satellite connectivity as an add-on feature to their existing subscribers. The customers are AT&T, Verizon, Vodafone, not individual users. The bull case for AST SpaceMobile has three powerful pillars. First, the partnerships are real and the milestones are proven. This is not vaporware. AST has already achieved the first native VoLTE voice calls and SMS over satellite using unmodified smartphones on AT&T's core network, followed by successful VoLTE calls on Verizon's network. They have also demonstrated direct-to-cell broadband in Canada with Bell, completed Japan's first space-based video call with Rakuten, and demonstrated military defense applications with unmodified smartphones. These are not press releases, they are live demonstrations with the biggest carriers in the world. Second, the scale of the opportunity and the partner network. AST has agreements with over 50 mobile network operators globally, representing nearly 3 billion subscribers, and strategic partnerships with AT&T, Verizon, Vodafone, Rakuten, Google, American Tower, Bell, and STC Group. The company has over $1.2 billion in contracted commitments and a $175 million prepayment from STC Group alone. Third, the AT&T, T-Mobile, and Verizon joint venture. This week's biggest catalyst, AT&T, T-Mobile, and Verizon, announced a joint venture to extend mobile connectivity using satellite-based direct-to-device technologies. Roth Capital called this a strategic win for AST SpaceMobile, highlighting that AT&T and Verizon are already partners and investors, and that this JV potentially opens the door to T-Mobile as well. If all three of America's major carriers end up routing through AST's network, the revenue opportunity becomes enormous. Management is guiding to 2027 revenue approaching $1 billion, with approximately 45 Bluebird satellites in orbit by year-end 2026. Now the bear case, and there are serious concerns here. First, the revenue today is almost nothing. Q1 2026 revenue came in at $14.74 million compared to just $72,000 a year earlier. Rapid growth in percentage terms, but still tiny in absolute terms. The net loss widened to $191 million in a single quarter. Full year 2026 guidance is $150 to $200 million, against a market cap of $45 billion. That is a price-to-sales ratio that assumes years of perfect execution. Second, the competition from Starlink is real and growing. Starlink Direct-to-Cell launched commercially in 2025, primarily partnering with T-Mobile in the United States. Starlink's constellation scale, manufacturing capacity, and launch economics give it tools to expand its direct-to-device capability faster than AST can expand Bluebird. If Starlink moves aggressively into the AT&T and Verizon carrier tier with competitive wholesale offerings, AST's competitive positioning comes under direct pressure. Third, execution risk is enormous. BOFA and UBS have trimmed their price targets, flagging back-half-weighted launches and revenue as a concern. Every satellite launch carries technical and regulatory risk. Regulatory delays or dilutive capital raises would skew outcomes sharply toward the bear case. The narrative can quickly break if the launch cadence slips or regulatory approvals fall behind, limiting satellites in orbit and delaying paid carrier services. And fourth, the valuation gap is extreme. One widely followed valuation model puts AST SpaceMobile's fair value at just 28 cents per share against a current price above $100. That is not a typo. The gap between current price and fundamental value reflects just how much future growth is already priced in. Wall Street's average price target sits in the high 80s to mid 90s, implying the stock is already trading above most analyst targets right now. AST SpaceMobile is attempting something genuinely extraordinary, covering every corner of the planet with broadband connectivity through a constellation of giant satellites using the phones already in everyone's pockets. The technology works. They have proven that. The partnerships are real. The market opportunity is massive, but between a proven technology and a $45 billion valuation lies an enormous gap that can only be filled by years of flawless execution, on-time launches, and carrier contracts converting into real revenue. This is exactly the type of high-risk, high-reward story that divides investors sharply, whether AST SpaceMobile becomes the infrastructure backbone of global mobile connectivity or gets outpaced by Starlink before it reaches scale, is one of the most fascinating open questions in the market right now. Hit like if this helped you understand AST SpaceMobile and subscribe for more deep dives like this one.